Hi, everybody. It's Jessica Stone at Stansberry Research, and I've reached Scott Garliss, the editor of the Stansberry Newswire. And Scott, we're seeing some interesting information that's getting a little undercovered. We found this study that The Economist is writing about that actually shows that U.S. poverty is falling in the middle of a recession, which is pretty unusual. It's certainly not something we saw during the housing crisis about 10 years ago. What explains this? I mean, again, this is an unusual thing to see in the middle of a recession, that you're actually having less poverty.
Completely. It's really hard to believe and astounding to say the least. But basically what's going on is the federal government is, with all these stimulus checks, they're putting more money in the bank accounts of people that aren't working. So we had the $1,200 payments, and on top of that, $600 benefit. So people are actually making more being unemployed than they're making at their jobs. So they're seeing their bank accounts rise and the disposable income's going up.
So you actually wrote a little bit about this. You talked about it differently in a morning commentary earlier in July. You're using the figures of M1 money stock from the St. Louis Fed, and we can put up that chart. It shows a really steep increase from March until July in billions of dollars in household disposable income. And why is that so important, not just for keeping people out of poverty, but for the economy and the economic recovery overall?
Yeah, so that's really important because what it tells me is that when we get through the coronavirus crisis, when a vaccine's discovered and things start going more back to normal, there is going to be tremendous spending power on the part of the U.S. consumer. And there already is. So what's going on is M1 money supply has grown roughly 40% from the end of last year. In the 6 decades they've been measuring this, that is the most growth they've ever seen. You know, that's a huge deal. And again, being disposable income, it can be spent and accessed really quickly. So what that tells me is when things get better, the economy is going to be in a really good spot in terms of it's going to take off. That's also going to be good for the stock market because as people have more money sitting in their bank accounts doing nothing because interest rates are zero, at some point, some of those people are going to say, where can I get a better return? And they'll look to the stock and bond markets and start investing some of that money.
So I think it's pretty easy to see how we got to this point where poverty actually decreased during this season. But what's to say that we can stay on that trajectory? I mean, what has to happen in the economy to keep people where they are right now without government intervention?
That's the key right there is government intervention. Again, the $1,200 checks and then the $600 of unemployment insurance. That unemployment insurance benefit may be going away. There's been talk about doing a go back to work benefit, a $400 payment. We'll see how that plays out. But keep maintaining this level is probably going to take a lot of people going back to work and making more at work. Now, for that to happen, like I've said before, what we're seeing with the M1 money supply, with all this extra income, if that can create this big tailwind for the economy, that's what's going to be important for keeping poverty where it is.
You have often talked about how you've seen the Fed, the Treasury Department, and the broader US government respond so differently this time. 11 lending facilities versus the last crisis that we had 10 years ago, which you were on Wall Street during. What does it tell you that we are in this position? I mean, when I'm comparing now to 10 years ago with respect to poverty in particular, it seems like they've definitely learned a lesson and people are doing better on the whole. That doesn't mean they're all working. It doesn't mean they all have health insurance, but certainly you can say that if poverty went down during a recession, that's an indicator of some measure of success for the federal government's intervention, no?
Yeah, I would say so. I mean, I think basically what we have is they get smarter. They learned from the mistakes they made last time. They learned from the positives they did last time. And so now we've had people that had been through this and they were able to recognize what was going on and employ a lot of the things they used before that worked. And that's what's making things successful. Now, again, one of the crazy things about what's going on here with all facilities is the Fed still has a ton of firepower of unused money left in these facilities. So the economic support, even if they don't do anything more at this point, there is still a ton sitting on the sidelines waiting to help out. So if the economy starts to dip again, I wouldn't be as worried as, say, I was back in March.
Thanks for being all over that and bringing us some counter perspectives there, Scott Garliss there with the Stansberry Newswire. And if you would like to see much more content just like this, please subscribe to our YouTube channel. You can also find us on Facebook, LinkedIn, Twitter, and Instagram. That's all for now. Thanks for watching.